Hello everyone, I'm Sidhant. Today we are taking the chapters number 12, 16 and 17. Probably tomorrow I'll deal with the chapter number 17. As in our group, that is the Facebook group, I already have stated that these chapters doesn't have much concept. It would be done also by going through the question bank, but lots of people wants to have a discussion on this chapter, the important ones, so I decided to deal with this chapter as well before the examination. I will take two chapters today, that is 12 and 16, and 17 chapter the day tomorrow probably. Okay, so starting with this, now important is first what is bill of exchange and what is promissory notes. So first we will deal with this, that what it's all about, then we will move on to the next thing. Now what is bill of exchange? Let's say in India, let's two person is doing business. In India, how business are done is that they take items or goods on the credit basis, means they pay money in future basis based on the agreement they do. So what does it mean, the bill of exchange, and what is the difference between the bill of exchange and the promissory notes? These are the instrument which gives a promise or an order to pay the amount of money in particular date. So in the bill of exchange, let's say this is a seller, this is a buyer. So in the bill of exchange, the seller will make an agreement document in which everything will be written, like the date, the amount, the dealing goods, everything will be mentioned, and here it will be written that by the seller that the person or the buyer are ordered to pay this much amount of money in this particular amount of time and this much amount of goods. So when seller make the agreement documents and write like this, like the statement that I ordered you to pay the amount, then it's a bill of exchange. Here the seller becomes the drawer because he's one who's making the documents, and this buyer is the drawee or payee, you can say anything. It's not the same case like the check. In the check, the drawer, the one who wrote the check or signed the check, and the drawee is the bank, and the payee is the person to whom we signed the check. But here it's a different case. Now this is one scenario. Now another option is the promissory note. When in this same business transaction, when buyer makes an agreement documents, and in the agreement documents he writes that I promise to pay this much amount of money at this particular amount of time and for this particular amount of goods, then this is a promissory note. Here the one who makes the promissory note is not called the drawer but a maker, and the other person or seller here becomes the drawee or payee. I hope you understand the difference between the bill of exchange and the promissory notes. Now the most important thing, that the journal entries could be asked from this section. What journal entries could be entered on those particular transactions? Okay, as I told you, as in the previous chapter as well, that these chapters is nothing but an application of the previous chapters. So the application of nominal journal entries concept will be applied. Now I told you to remember this. In order to make any journal entries, you must remember this table, so that we can make any journal entries in the accounting chapters or the questions. Now the accounting for the personal account, debit the receiver, credit the giver. Real accounts, debit what comes in, credit what goes out, and nominal, debit all expenses and credit all income. So when X sells good to Y, now this is a company, the X maintains his own book, Y maintains his own book. Now when we are taking X book, so in the X book he will mention about Y only, and in the Y books he will mention about X only. So when X sells goods to Y on credit, what does it mean? Now in the X book he will mention about Y. Now for X, what Y is, means he is giving the goods on credit basis. It means that in future the Y has to give money to X. So here the X has some, or you can say kuch lena dena hai with Y. So Y becomes a personal account for X. Similarly, X becomes a personal account on the books of Y. Now when we write the general entry in the book of X, now Y is someone जिससे कुछ लेना देना है, means in future the amount will come. So we will see the personal account. In the personal account, here we are writing about Y. So the giver, so Y becomes the receiver because he is receiving the goods and he will pay in future. So he is receiving the goods. Y is the personal account in the X book, and whenever there is a receiver in the personal account, we need to debit it. So in the X we need to write Y account debited. And what other accounts involved? The other accounts is the goods account, or you can say purchase account. Both are out and out same. For the same things we classify names, depends on the situation. Here we need to write purchase account. No, X is selling, sales account, credited. If you find one, other one is credited. Similarly, in the books of Y, how we can find? We need to write about X. Now what X is the giver because X is giving the goods on the books of Y. So we will write to X account credited. Why credited? Because on the books of Y, what X is doing, X is giving the goods and he's giving the goods on credit basis. So future में कुछ लेना देना है X के साथ. So this is a personal account, and when this is personal account, the one who gives, the giver, credit. So X account credited. What other accounts remains? The other account is the purchase account. Goods account are also called the purchase or the sales account, depends on the books. So here the same goods account are called the sales account and same goods account are called the purchase account here. Now when X account credited, what other accounts will do? It will be debited. That is the purchase account debited. You can also check other way around, like in the books of Y, if we see the goods are coming. Goods, what is goods? We have we have two accounts. In the books of Y, we have two accounts to which we need to do the journal entry. One is the purchase account, another is the X account. Now if we have write the journal entries based on the X account, we can also do the other way around, like purchase account. What we are purchasing, what Y is purchasing? Goods. Now what is goods? Goods is a real account. Now we will see what is happening. It is writing debit what comes in. So for Y, goods is coming, so we have to do the purchase account in the debit side. Similarly, the purchase account is in the debit side. It's simple. Now the next is we need to, okay, what if the bill of exchange is involved and if it's not on the credit basis but it's on the bill of exchange is drawn. Okay, one more thing I want to say. Bill of exchange are of two types, like side bill and usance bill. Side bill is the bill which is paid on demand. At the moment the person see the bills, he pays the bills. But usance, in usance bill, the future date will be mentioned and the particular date, a due date will be mentioned, and on that day the amount or the bill payment will be done. This is the difference. Now when bill of exchange involved and no credit is done, what will be the credit? What will be the general entries we need to put it into our mind, so that the question if asked we could easily be answering the questions. Now since here when bill of exchange involved, what all accounts, let's say we need to write on the wise book. What is the general entries on the wise book? So in the general entry, wise book, so on the wise book, what all accounts we need to find first? First one is the X account is involved on the wise book. X account involved. What other account is involved? Here the other account was the purchase account, but here the bill of exchange is involved, so the other account involved is bill of exchange accounts. Now since bill of exchange, what Y needs to do? Y is accepting the bill on the basis that in the future he will pay the amount. So bill of exchange, purchase, payable accounts. So this is bill of exchange, or you can simple say credit bills payable account. You can also remember this, they will directly ask this question, but you need to understand why it is happening. That's more important. Now the credits bill payable in future, so this credit bill payable is nothing but a real account, and in the real, for the Y, this credit bill will be paid, so what goes out will be in the credit. So credit bills payable is in the credit, and other account, that is X account, will be in debit. So this is the gist of the chapter. Now moving on, this is important. Okay, one important thing, that when bill of exchange is drawn, the bill of exchange is only be enforced when the other person has accepted it. Let's say the seller has made the bill of exchange and he sent it to the buyer. So when buyer accepts this bill, then the transactions could be enforced in any court, or we can, in simple words, the transaction is valid when only the buyer is accepting this bill of exchange. This is the thing. So only who is liable when bill of exchange is made? So before acceptance, the seller itself is liable, and after the acceptance, the buyer is liable. This is the thing. And okay, we already discussed that in promissory note, the one who make the bill is the maker. We can say it a maker. Now the next thing is the accommodation bill. What is accommodation bill? The bill of exchange which is drawn without any consideration is called the accommodation bill. What do you mean by consideration? Consideration here means the any conditions. The bill of exchange, if doesn't mention anything, any conditions, the date or the time or anything, then it is called an accommodation bill. And if the due date of the bill is a holiday, then it will be payable on the next proceeding business day. This is important for the examination point of view. Okay, one more important thing, that let's say the bill is made, a bill is drawn on date, let's say 01/01/2019, and in the bill of exchange it will be written that, and this is an usance bill, and after 2 months the due date will be happen. So what will be the what is the date on which the bills become due? So for this 2 month, that is 3/2019, but plus 3 days you need to do, because the 3-day period is a grace period. So by 4/3/2019 the bill becomes due. This is important. And count if the date, if the number of days given, let's say the 90 days, and if it's say any month, so you need to count the day. You need to take the month which has 31 days and the month which has 30 days. You need to take care of that. For example, if the bill is due after 90 days and the date is 01/01/2019, so 90 days, how it will be count? The 31 days for the January, 28 days for the February, because it's not a leap year day, non-leap year day, it's a and the next what so 59 days has happened, what is left is 21 days. So after 21 days of the March you need to, and plus the 3 days, the due date will be decided. This is how it works. Now as far as the dishonouring of the bill of exchange is concerned, let's say due date got passed. So due date got passed, it means the bill got dishonoured. Now in order to enforce the dishonoured bill in the court, what you need to do? You first have to, for the dishonouring, you need to do the protesting. What is protesting? Protesting is just a note from the notary public. You need to notarize it, then you can enforce it into the court or any other place, or you can claim the amount from that person. This is the thing. Now if X draws a bill on Y, who makes a part payment on the due date, and the request for issues of a fresh bills for the balance amount to which X agrees, this is called what? This is called a renewal of bill. Means, let's say X draws the bill of exchange and Y has accepted it. The amount, let's say 2 crore of rupees, but at this due date the Y could able to pay only 1 crore of rupees. So if X agrees, then for another 1 crore another bill of exchange is made for that 1 crore and another time period is given. So for this process is called a renewal of bill. One more entry we will see, that is the maturity of bill of exchange. What do you mean by maturity of bill of exchange? So after due date the bill got matured. What will be the entry? Now we write this entry on the books of Y. Now since in the books of Y, when the bill matured, it means the Y has to pay the money, and he pays the money either through cash or check, and cash or check is nothing but a real account. So what goes out is the credit. So the cash and the check, credit, and to whom it is giving? It is giving to the it is giving to the X, which is nothing but a payable account. So bills payable account debited. You can also remember this tool, here I described the bill of exchange entry and this entry in mind, because they will ask directly if you don't understand how to make use of the table. But it is important. I already have told you how to use it, and we have discussed so many of problems. The basic one, they will ask the basic one only, and these 4 entries is important for this examination point of view. That's why I discussed whatever is important, I discussed it with you. And I will today I will try to make one more video, the chapter number 17. Again, the chapter number 16 and the 17 is very easy. You need to learn or remember the factual facts. It has factual facts which need to be remembered. Here some concept is there, but there is no factual concept. That's why I asked everyone to practice directly from the question bank, so that you can remember till the time you give the exams. But no worry, I will tell what to remember and how to remember, so that you could attempt those questions in the examination. Okay, that's it. Thank you.